Hello everyone, great to have your company on Kalkine TV. I'm James Preston and you're watching The Buzzing Trends. In today's show, we'll be taking a look at why APRA introduced home loan curbs and raised the interest rate benchmark. The banking regulator has announced tougher serviceability tests for home loans, which will make it harder for some borrowers to get a mortgage. In a letter to banks today, the Australian Prudential Regulation Authority, or APRA, has increased the minimum interest rate buffer on home loan applications from 2.5 to 3 percentage points. It estimates the increase will reduce the, quote, maximum borrowing capacity for the typical borrower by around 5%. It also says the move will not have any impact on mortgage interest rates. All authorised deposit-taking institutions, or ADIs, should be operating with a buffer of at least 3 percentage points over the loan interest rate, according to the regulator in its letter. It also went on to state, where ADIs continue to approve loans using a lower buffer rate beyond the end of October 2021, APRA will adjust individual prudential capital requirements to reflect higher credit risk inherent in new lending. On this note, let's see what the Australian Prudential Regulation Authority's announcement actually means. Well, it means that from November, banks will have to test whether new borrowers can still afford their mortgage repayments if home loan interest rates rose to be 3 percentage points above their current rate. In other words, if you applied for a mortgage with an interest rate of 2% on November 1, the bank would be testing to see if you can afford to make repayments with a 5% interest rate. If the individual cannot, then the loan application would be denied. If they do not use this higher test, they will be financially penalised by having to hold more reserves against losses, which would reduce the profitability. In practice, this means all regulated institutions will use the minimum 3 percentage point buffer. For home loan applicants, it means the maximum amount people can borrow relative to their income and expenses will be lower than it was under the old serviceability test of 2.5%. APRA noted that the risks were indeed mounting. APRA Chairman Wayne Byers said the move was intended to head off building risk from a number of growing large mortgages. He noted that while the banking system is well capitalised and lending standards overall have held up, increases in the share of heavily indebted borrowers and leverage in the household sector more broadly mean that medium-term risk to financial stability are indeed building. More than 1 in 5 new loans approved in the June quarter were at more than 6 times the borrower's income, and at an aggregate level, the expectation is that housing credit growth will run ahead of household income growth in the period ahead. The Commonwealth Bank's Chief Executive, Matt Comyn, said in a statement that they believe that APRA's announcement to increase the serviceability floor is a sensible and appropriate step to help take out some of the heat from the housing market. The statement read, "Having increased our floor to 5.25% in June, the Commonwealth Bank thinks that this further step will provide additional comfort for borrowers and is a prudent measure for leaders. However, the experts believe that the further restrictions may be necessary." Many analysts had expected a move to tighten home loan requirements after recent comments from regulators and the Treasurer, but most did not expect the change to happen so quickly. However, some say we can expect to see more tightening measures in the future. APRA agrees that the overall impact on aggregate housing credit growth flowing from this is expected to be fairly modest. Well, very interesting times ahead for the Aussie property market, and at Kalkine we'll be sure to keep you up to date with any further information coming from the property space. That's all for this special edition of The Buzzing Trends. Keep it locked on Kalkine TV for the latest business and market commentary and breaking news. I'm James Preston, signing off for now.